Hello everybody, I hope you're doing well. It's Lane here with MetaShackle. This is part 2 of a 3-part series. You can go back on my video list and click on the part 1 so that you can get caught up. This is all based on my XRP breakout chart that I've developed, but if you would like a copy of the XRP breakout chart, all you have to do is email me at metashackle@gmail.com. So picking up where we left off, this false breakout that is most likely going to occur, I believe that it is going to come out and take out the buy-side liquidity at this range towards the upper trend line. But if that doesn't happen, then the odds are it will happen around this level, because we can see that this fair value gap, this SIBI that is formed, thus far has been respected. There has been candles that have wicked through it, but no candle is closed within it or above it. So if the price action, when this rally begins, does bounce off of this, then most likely this false breakout will occur in this area, sweeping all the liquidity in this general area. You know, it could wick up into here, but as long as the body of the candle doesn't close outside of this SIBI, then most likely everything is going to be contained here. If it breaks through this, closes above, it's coming up to here. Now, it doesn't necessarily have to break out like this before the big drop comes, because it's going to need a catalyst. Now, there's a lot of different ways this could go, and I have no idea what the catalyst is going to be. It could be that Trump is, say he's voted in, and then they find some extra votes all of a sudden, and then they switch it to Kamala at the last minute. Or it could be, say Kamala just wins, and people don't like her, don't believe in it. It could be an economic crash. You know, if Kamala gets reelected, they'll probably put it off till next year. But if Trump gets elected, they can pretty much just crash the darn thing any time after, you know, the November elections, once he's confirmed. Or it could be something like war breaking out in the Middle East and going to a higher level. There's so many catalysts. So if this doesn't happen to this degree, there's going to be a smaller version, because they're going to have to gather up buy-side liquidity in order to take the price down. And odds are, from looking back at the charts, what we're going to see is we're going to see this low right here is going to be taken out, and all of the sell-side liquidity between those 2 points, current price and here, will be taking out, meaning that it will sweep somewhere between this candle and the liquidation candle low that we saw here. Because last time down here, it did not take this out. So it might leave this as the last point of liquidity standing before we go to a higher level. Another thing that you have to keep in mind is that when you take off the logarithmic chart and you adjust it, the liquidation candle on the current XRP breakout chart, I don't believe that this is going to be the liquidation candle, the final one, and I'll show you why. Because on the logarithmic chart, it fits perfectly. So it would indicate that this is the only candle that is going to break below this lower trend line. But if we take off the logarithmic chart and we take a look at it, we can see that this low here is actually lower than this low. So if this liquidation does come down into this general area, this lower trend line would basically just be adjusted downward. If it doesn't quite come down to that point, say it comes down into here, this will basically adjust this lower trend line up into this range, which means this will still be the previous low, and then we will create a new liquidation candle there. So it could change, and I do believe now that it is going to change, and I do believe that when this liquidation candle occurs, that it is going to come down in this range right here, between this low and this low, somewhere in this range. It doesn't have to, but I believe that it will. At a very minimum, it will come down to here. This is kind of what I believe is going to happen. It's going to be something similar to this, because we have yet to form the fair value gap that we need to see on the charts in order for the XRP breakout chart pattern, which has repeated 4 times so far, to repeat for a 5th time. And it is going to repeat for a 5th time. So what we would end up seeing is a big run in XRP, where it would start taking out the buy-side liquidity, anything above this range here, where price has basically allowed for long stretches of accumulation. So we'd end up seeing a big candle, and then once it hits a point, I believe it will create an internal volume imbalance, similar to what it did here, which has only happened once on the charts right here. I believe it'll happen for a second time when that occurs here. When the price pulls back, it'll hit a bottom. And remember, each one of these represents a month. So let's say this candle happens in December because Trump gets elected. This is just an example. So price rallies. Then come to January, price pulls back because we start to see some other events, some other fractures in the economy. So price pulls back, starts to form kind of a bull flag pattern. So the third month, price comes up. So now what we have done is we've created the gap that we need right here in order to form that fair value gap, which would fall right in this range. So this candle pattern has to be created in a way to create the fair value gap that we need, which would be the first 3 candles, which would add 5 subsequent candles afterwards, breaking out on the 8th candle. So once these 3 candles have formed and we have established a new fair value gap, these fair value gaps are null and void and obsolete, and we've created that fair value gap. Let's say that the fair value gap forms right here in December and January, giving us the 2 points that we need to make the fair value gap. So this would count as the first 3 candles of that fair value gap. At this point, there would be 5 additional candles. The 5th candle of those 5 for 8 total from the start of the fair value gap will be the month that XRP breaks out of this, pops out of this wedge, and goes on to new all-time highs. But it doesn't necessarily have to happen this way. There could be a situation where, let's say, it doesn't take the bullish approach. Let's say Trump gets elected and they decide, you know what, let's just crash this sucker right now because it makes no difference. So if that was the case, you would end up seeing something like this, where we just get a big red candle. It leaves all the buy-side liquidity alone. Comes after the sell-side liquidity here, takes everything out along this plane, leaves this as the last point standing, which will never be seen or touched again. And then you would end up seeing something like something similar to this that would come up, maybe set a new high, higher high than this range, and then we would have, say, another subsequent candle in this range once it corrected, and then that would create the fair value gap that we need. So there's a few different ways that this gap could form. Just because I believe that the price is going to come up and take out this buy-side liquidity, bounce off this trend line, either that or come through a hair, then fall back through, because once it comes through, all the breakout traders would hop on board thinking it's going to go up, and then when the price declines, they're all going to get stopped out. And everybody chasing this candle all the way up to this line is going to get wrecked when the price falls back down. So I do believe that's going to be the most likely scenario that we're going to see, but it doesn't necessarily have to be that way. And if it respects this gap right here, this fair value gap, we could have an entirely different scenario as well. We could have something where, say, the first candle comes up like this, corrects a little bit like this, and then this candle would be null and void. So we'd have a situation where if we rallied up, then came down, we would be able to form the fair value gap right in this area here. Then we could see the subsequent liquidation candle come afterwards. Because a lot of times when you look back on the XRP breakout chart, when you look at this chart, you can see that these liquidation candles that have occurred in the past have occurred after the formation of the fair value gaps in white. So the fair value gap formed, liquidation in the middle. Fair value gap formed, liquidation candle in the middle. Fair value gap formed, no liquidation candle. Fair value gap formed right here. The liquidation candle happened previous to this. So there has been a precedent set with these two here that the liquidation candle occurred in the middle of the fair value gap. We've had it where there hasn't been one. We've had it where there's been one previous, and it still came down and touched the trend line here, but it didn't break this lower trend line. It also came down and touched right here, didn't break the trend line. Here, didn't touch the trend line or break the trend line, and here where it didn't break the trend line. So that's also a common theme. We've also had it come down and touch here. But this is the current liquidation candle, But I don't believe that's going to end up being the final one. I think when that candle comes down, takes out all this sell side liquidity right here, it's going to end up somewhere down here, and this lower trend line is going to be adjusted in this direction, and we will still have the 2 liquidation candles, but more of this area here will be kind of in the center of the wedge itself, and then the price will break out. Because we've had times where the accumulation period, it rose above that to take out the buy side liquidity before coming down, taking out the sell side liquidity, and then rising up. And remember, you need to take liquidity out of the market because the liquidity is rocket fuel. So you're not going to get anywhere unless you chew up some liquidity. So they took out the buy side liquidity to bring the price down. This gets the short sellers in the market selling shares into the market, anticipating that the price is going to go down. And then as the price goes down here, they take out all the sell side liquidity. Then you get the opposite effect. The short sellers are now buying to cover, so they're buying shares to close their positions, and long positions are buying shares in this candle here, anticipating a rise in price. So you get a compounded effect of short sellers buying back and longs buying shares to establish long positions, and they've chewed up all the liquidity underneath here, so boom, price skyrockets. And as it's going up, it chews up the remaining buy-side liquidity that has yet to be taken out, which compounds it even further, taking us to new all-time highs. You're going to see that same thing here. So they're going to leave a certain amount of buy-side liquidity up here at the highs, because when it starts to run out of steam, that's what they're going to use as their next dose of rocket fuel, so that this can happen here, and we're going to go to new all-time highs. But I do believe that we are most likely going to see that this trend line is going to have to be adjusted at some point to accommodate for either a new liquidation candle or one that's expanded, because I don't think this is going to last right here. There's been so much accumulation up here in this area. I think in order to take this up like they're going to, I think they're going to want to scare out as many people as they can right through here. So how are they going to get that liquidity? How does a market maker or an institution get liquidity out of a market that doesn't exist? Well, it's simple. They drive the price down to the point to where they scare the heck out of retail, and then retail sells that to them for cheaper, for like a discounted price, and they buy those shares for cheap, then they drive the price up. So if they can drive enough fear into retail to sell their XRP to the institutions and the market makers and the hedge funds at a discount, then they can take the price up. So there's quite a few different ways that this could go, depending on the outcomes. But the one thing that we know for sure is that in order for this market to move anywhere, they're going to have to generate liquidity. They're going to have to chew up shares, because price is basically just a byproduct of liquidity and time. So I believe we're going to see something similar to that. So regardless of what outcome ends up coming, whether it comes up and chews up this buy-side liquidity at the highs, bouncing off the trend line before collapsing, whether the price comes up is stopped by this fair value gap and plays around in here before it collapses, either way, we're going to see it chew up some buy side, and we're going to see it chew up all of the sell side, with the exception of this candle right here, I believe. It could come below this and clear it out completely, but odds are they'll end up leaving this. So that's one thing to think about. With all this liquidity, they're not going to leave it behind. So the benefit to them is generating all that liquidity is if they drive this candle down, every single point of sell-side liquidity all the way along this chart, going back all the way to 2020, in one candle could all be gathered up and taken back to the upside. So none of this is going to be left behind. None of it. Now, everybody in retail is anticipating a massive move upwards, but it's going to be a false breakout. So this is part 2 of a part 3 series. I'll be doing the part 3 here soon, so keep your eyes open because it will be coming. Thanks for watching. Have a great day.